Good afternoon. This is Dwayne. Today is Tuesday, the 9th day of April 2013. It is 11:25 a.m. Pacific time. We're at the end of the radio show today, and I've asked the audience to find a market that we might trade. And the market they brought was the yen. They brought a couple. We looked at a couple. Some were setups. Some of the guys in the audience said they would have traded them. Anyway, we're gonna take a look at the yen here. Let's just get a little trend line going. Okay, what do we have? We have bearish divergence. The cycle is red and laying flat across the bottom. The green line here, part of the slingshot, it's up at the top. So that's bearish divergence. We have a bearish cross, and as we can see, as we got that bearish cross, price has continued to fall and pull back and fall and pull back and fall, and now it's pulling back yet again. Okay. Now it's already bounced off the BBC a couple times, and so it's going to take, this is probably going to require two candles. We would need a down close followed by another down close to get me below this trend line. I don't know how many of you hung around yesterday for that ES trade, but that thing took an hour and 14 minutes for it to finally go the full 2 points. But I left the trade on and I recorded the video, and I'll get it posted on the blog tonight. Spoiler alert to anybody that hasn't watched all, let's see, 74 grueling minutes of it. Yeah, sorry. Sorry to spoil that for you. All these headset, I gotta figure out a better way to do this. Well, once I get the new mic hooked up, then that's gonna create its own unique problem. Oh well, I'll worry about that when it happens. Alright, here's what needs to happen. We need to get a down close. Now the high of this candle right now is 10.081. Let's bring up a DOM. It's kind of like taking your shoes off so you can count your toes. So if the high is 10.81, 10.081, that's the high, 10.081, and if you go 1, 2, 3, 4, that means if you get a down close, it's going to close at 10.077. The next candle will open at 10.076. However, 076 I don't think will get us below the trend line. So that's why I said we would need two candles. We would need two consecutive down closes to get below that trend line. So we'll see. We'll see what happens. We'll keep an eye on it. Zeus says if the cycle stays red, I don't need a trend line. Dan says, why do we need it to close below the trend line when the trend line is still red and the price hit the BBC? Well, I'm going to tell you. Now, Michael may do it a little differently, but see, we've already hit the BBC. See, that bearish cross and then the first pull back to the BBC. That pull back to the BBC, it's done. It's a done deal. That energy you get out of that first pullback, the cross, and then the first pullback, that's kind of done. Now, this may very well be a situation where Mike will go ahead and just trade it. He might just trade the pullback right here. And I suppose one could do that. Is that what you're saying, Dan? Is that you would just sell it right here at the BBC without anything? Zeus, is that what you guys are telling me that you would do? You would just sell it right here on the pullback? Yeah. See, this thing's already pulled back once, twice. This time it couldn't quite pull all the way back. See, there's already 3 pullbacks. I need more confirmation at this point than just another pullback. So if that runs afoul of the written rules, then I'm erring on the side of caution. Yeah, I just drew a trend line right here across these bottoms. I'm not really in, because from here, now granted from here to here, there's actually a little room to run. By the time you get below this trend line here, you don't have a long way to go to the low of the day and the previous swing low, but that's okay. If it's heading down, it's heading down. Mm-hmm. Guys, I'm going to pause this for just a moment and I'll be right back. Okay, we're back. Sounds of silence there for a moment. I can see that absolutely nothing happened in my absence. So, anyway, I'm not going to trade this off just to pull back to the VVC, guys. Let's see what we got in the chat room over here. Do you know any reason why on my 6JM3 price has not touched the BBC? Well, Alan, here's the thing. We each started our computer at different times. See, on a time chart, if we were both running like a 5-minute chart or an hourly chart, then our charts would match up perfectly. But because whenever I start my computer and start this particular chart, that's when it starts crunching data. And it's going to crunch, crunch, crunch until it's time to create a new candle based on the 4 ticks. And so yours, you just simply started your computer at a different time than mine. That's the quick answer. Okay, let's see what we got here. S&P Cash is retesting the all-time intraday high of 1573.66 of April 2nd, and just retouched the S&P futures top of 1568. Is this an important double top resistance, or do we break through and have a new important support level? Time will tell. Well, you know, Steve, I had a chart up on, it's up on the blog. It's still out there. I'll probably repost it tonight because of today's action, and that will, it's important. What's more important than the double top is the triple top. It's the biggest, nastiest, ugliest triple top in the history of the markets. In fact, I believe that is the title of the blog post. Let's go have a quick look. CFRN. Yeah. Maybe we'll have a look, and maybe we won't. There we go. That's because I got the recorder and everything else running. Come on, you can do it. I want to watch this trade too. It's not going anywhere. Okay, here's the blog, but you got to go. It's going to have to be patient. Let it load. It's going to take it a minute. Anything else setting up, guys? I'll go look at that. We aren't committed to this trade yet. Alan, did that answer your question? Okay, this thing finally loaded. So now what you need to do is you need to be on the, click the navigation pane up here where it says E-mini radio blog. Now we get to wait for that page to load. Oh dear me. I got a lot of horsepower under the hood on this computer, but apparently I could use more. Okay. So I'm at the table of contents, go to find, and then type in triple top right there. The biggest triple top in trading history. See that? Okay. We wait for that to load. Right here, S&P triple top. 99, 07, 08, and now. triple top. Now this post talks about triple tops. It talks about how bearish it is. It talks about the biggest triple top in the history of Wall Street. It's a big deal. It really is. And could it be the, you know, I'm not a doomsday end of the world guy, but in the grand scheme of things, this is huge. Biggest triple top in history that I can find. So and so where did that put the ES? Okay, the ES got a little bit closer to the weekly zone. See, that makes more sense. Okay, so far the swing high is now 68. So now we've come within 4 ticks of the weekly zone. I mean, price should work its way up to the zone, but we'll just have to wait and see. Again, zones are an area. Like here on the way down, I mean, it punched through it a little bit. Over here, it punched up. But as you can see, the zone was the fulcrum. Up, down, whoosh, up to the next zone. So zone to zone to zone. That's the way it goes. That's just the market. Okay, Alan, I'm glad. That's something to remember, guys. Anytime you're using volume charts, tick charts, range charts, they may not match the chart you see on our screen. If we're showing a time-based chart, hourly, 1 minute, daily, it should be identical. Because it has nothing to do with when your computer started and began crunching the data. It has to do with the clock hanging on the wall. Alright, let's go back to the 6J. I still don't have anything to trade here. Is there anything else setting up, guys? I mean, I don't mind waiting, but it's going to take us. This candle's got to close, but that's the thing with a range chart. I mean, it could take an hour for this candle to close, and then the next candle might take 1 minute if price starts to move. Okay, well, after the trading room and the radio show, yeah, I wish I could be more talkative right now. You know, tell you some funny jokes. You know, I could play music. Oh, but if I play music over there, radio guys can hear it, but podcast guys, I mean, trading video guys can't hear the music, but radio guys can. Well, need to do something for the radio guys. I started to play this earlier when David brought it up. He said something about raining down. Good song. Maybe it's not the song I thought it was. It's a Christian song, Rain Down. Yeah, that's not the version I thought. So I'm not going to play it for anybody. Zeus said goal set up, and I didn't see it. Now Zeus said never mind. Okay. Okay, see, we got to close right at the trend line. Okay, right at it. Cycle, blue starting to hook up. I mean, the fact that this is blue, I'll still trade it if it's blue. I just want to see a down close here. I want some conviction. I want to know that we've at least got a shot at taking out this swing low. Because if we get into a trade, this will be the immediate obstacle to the trade right here, low of the day. Alright, see, this has actually got some movement. So the high is 77. Oh, look at that. Okay, I'm trying to get filled at 73. We're at 72. I don't know if I'm going to get filled or not. If I don't. Now, remember, we waited all that time for this candle, and then this candle just went by like that. Like lightning. Alright. So our stop loss is at 10.081. We got triggered in at 10.073. We have two ticks in the trade so far. I sold it, so down here I got to buy them back. Let's get out in front of this thing a little bit. Alright, so right now we're at 10.062. We'll adjust that in a moment. I just want to watch this, and I want to watch my entry. Entry 10.073. Stop loss 10.081. Eight-tick stop loss. Now that stop was placed automatically by the DOM, part of the bracket. No target on the yen because sometimes it can run as it started to do right there. In this case, it was abruptly halted, but let's go ahead and just look at the obstacle to our trade. See, we said this before we even got into the trade. We said right there, the low of the day, the previous swing low, that is the obstacle to our trade. We've got to close below this 10.070 right here. Okay, if we can get below that, then it's kind of wide open spaces down below us, and we can certainly take a few ticks out of the trade. My main goal will be to get my stop to break even plus a tick. If price heads back down and can take out this swing low, once that swing low is taken out, my goal will be to get my stop loss to break even plus one tick, because that one tick covers the commission on the trade. So even if price ultimately comes back to stop us out, it's been a free look at the market. Now all we can do is be patient and wait. Oh, Zeus says that's not the low of the day. Thanks for pointing that out, Zeus. See, that's the thing with a 4-tick range chart. Sometimes you get a little bit of tunnel vision. You should always have a larger time frame chart for any market you're trading. But see, I've got you guys as eyes helping me out. So while it's a previous swing low right here, as Zeus just pointed out, it is not low of the day. What is low of the day, Zeus? Is that the low of the day? Or is that the low of the day? Well, are you going into last night? 10.070. If that's not the low of the day, it's awful close. 10.037? What was that, yesterday afternoon? Oh, right here. Oh, that's 10.053. Oh, well, I won't worry about it right now. But thanks for pointing out that it wasn't the low of the day. Okay, so, however, price is acting as though it were the low of the day. See, it's come right back up here to test this BBC again. Okay, we've got our hard stop in. Price testing the BBC. This is going to be a deciding factor right here. We need to get a close back below the black line, and then we need to get a close back below this area right here, 10.070. Cycle is blue, starting to point up. Our green line here is going sideways on us. All we can do is be patient here and wait, because we've not had a chance to move our stop down to break even plus a tick. We need the trade to actually go in our favor first. It did initially move a few ticks in our favor and quickly reversed. Yeah, I agree with you, William. The divergence aspect of this does not look good for this trade. We're in the trade. Now, if you were in the trade, and it might be part of your plan, hey, I'm in the trade and things don't look good, I'm going to scratch out with 4 ticks. There's no law that says you have to take the full 8 ticks. The law is you got to do whatever is in your trading plan. Okay. If your trading plan says you take the full hit, you take the full hit. If the trading plan says that based on whatever, and William just pointed out that divergence, is starting to look like we're heading north instead of south, can you scratch out with a 4-tick loss instead of taking the full 8 ticks? Yeah. Mike Reed does that all the time. No, Iris, it's... Oh, well, we don't have 4 ticks profit in the trade. We're down 4 ticks. So, yeah, we'd be taking a 4-tick loss. Right. But you are correct. There's a double bottom here. I see what you're saying is you would just go ahead and take that 4-tick loss because we're trading against a double bottom. No, that's very well said. I'm talking into 2 microphones now, the live radio microphone and the trading video microphone. So guys, if you're listening, anybody that's listening to this trade video after the fact, if I forget to say goodbye or close it out in the proper way, whatever that is, then understand it's because I'm taking a trade in a live market while I'm doing the radio show, and I'm not the sharpest tool in the shed. So I'm running at 100% right here. This is all I got, and I'm tired on top of that. What is the benefit of a trading plan and staying in a trade that is showing indications of turning negative? Well, we'll just watch, Alan, and I think you might just see your own question answered here. Alan says, what's the benefit of a trading plan and staying in a trade that is showing indications of turning negative? Well, if you read the book, Trading in the Zone, there's an argument that says once you accept the risk of any given trade setup, that you have done that you accept the risk. William says, how do we know you're not the sharpest tool in the shed? That's a good question. I guess you just have to take my word for it. That's good. Does accepting the risk mean do or die? Alan, have you read the book Trading in the Zone yet? It's recommended reading for every CFRN partner. Okay, go back and read that part again about accepting the risk. Now, just because Mark Douglas in his book says that's how he does it, doesn't mean that's how Bob says get a smaller shed. Or just kick all the other tools out. So yeah, Alan, go back and read that part about risk again. Okay, Mark's take is that once he accepts the risk, he's going to be in it do or die. What I'm saying is you don't have to do that. You can write your trading plan differently. Your trading plan could say, when such and such happens, or the trade looks like it's going against me, I will try to minimize my loss and get out of the trade. Write that into your plan if that's how you're going to trade. Because the key is to have a plan and to always trade according to your plan. This way, over a large enough sample size in a given period of time, you're able to determine what actually works and doesn't work. If you change your swing every time you step up to bat, you're never going to know for sure what really works. And what works for one guy may not work for you. And so you got to determine what your rules are going to be. And that's why it's so important when you write your business plan and write your trading plan, you give it a lot of thought, you take plenty of time, because you're going to live by that thing. You're going to trade by that thing. Don't put something in there that you can't live up to or aren't willing to live up to. So we've had more than ample opportunity to scratch out of this at less than our hard stop loss, which is 8 ticks. The market has literally begged us to get out at a 3, scratch out at a 3 tick loss. Couple ticks. For training purposes, we're going to remain in this trade until one of two things happens. We either get stopped out or I'm able to get my stop to break even plus a tick. One or the two. I don't make any promises beyond that. One of those two will happen. Now I want you to notice here, see how we came down. Now Iris pointed out double bottom here. Now see how this is just starting to curve up. I can't draw a curved line on this screen. Can you see it with your mind's eye? I'll put it this way. At this point, I'd be very surprised if this candle does not close above the BBC, which then drags the black line into the green line, and that's definitely a time to, if you've given yourself the liberty in your trading plan of scratching out, it's really a good time when that happens. Because once we go back above here, once price closes back above the BBC, then the high probability part of this trade it's gone. Alright, we're down 5 ticks, 3 more ticks, we're out of this thing. Our entry was 10.073. Our stop loss, which was automatically placed 8 ticks behind us by the DOM, part of our bracket order, 10.081. We're honoring that stop. We're staying in the trade. We've talked about the reasons why one might scratch out of the trade. And if you're in the process of writing your trading plan, give that some thought. Okay? Go out and don't just make something up, but go look at historical charts. Figure out some percentages. Look at how many times it would go in your favor, how many times it didn't go in your favor. Walk through the chart bar by bar by bar and really do an analysis so that when you say, okay, this is it, this is my plan, this is my best work, you're done, you're finished. You don't ever have to strive to be a great trader again. Now all you have to do is become excellent at following your plan. And if you're excellent at following even a mediocre plan, your chances are, pretty good. Certainly a lot better than the guy who has no plan. Thank you very much, Alan. That's very kind of you. Do you have a time when you won't take any more trades, 3 or 4 or 2:30? Well, there was a time, Scott, like when I would go to the office and then come home. But now that my studio and trading desk, my trading desk is inside of my studio, and I moved my studio into the house upstairs overlooking America's largest amusement park, or not amusement park, but a city park. I take trades, anytime I see something setting up. And over the last couple of years, the markets have become more and more a global type of market. I know that in the afternoons it's going to slow way down. And the early evening in the Asian session, it's going to be slow, and then it's going to pick up around the London Open. So with all those things taken into consideration, everything that we do still plays out in the slower market. It just takes it longer to happen. So I don't personally have a hard and fast rule of I don't take a trade after a specific time. But you could, and you could certainly write that into your plan. And I know that many people do. Many people won't take a trade 15 minutes before the close or 30 minutes before the close. Some people won't trade the first 30 minutes after the opening bell. And some people only trade the first 30 minutes after the opening bell. Okay, here we said our entry was 10.073. We're down 3 ticks at 10.076. Our stop loss is up at 10.081. Price has pulled all the way back up to the BBC now for, since we got into this trade a second time. Okay. Still, we've had plenty of opportunity to scratch out of this thing with a 3 tick loss. 5 ticks less than our hard stop. But for the purpose of this video, we're just going to let it sit. Scott says, just heard on the wire that North Korea has told everyone to evacuate the lower peninsula in preparation for thermonuclear war. Dear Lord. God, let's pray. Father, we come to you right now in prayer, and we ask that your hand be upon all of those in South Korea. Touch the mind of this man who's not thinking clearly and thinking straight. Perhaps he would change his mind, or maybe his gun just doesn't go off. But spare the lives of the innocent. In Jesus' name, amen. All right, here we go. Coming up, we should testing this thing again. Now after that test, we got a little double top here at the BBC. And now we could scratch out with a 2 tick loss. Francis says that news could affect your trade. It could, Francis. That's very true. It could. Let's see if it's affecting the S&P at all. S&P has found its way up to the zone. We hit it to the tick on this candle right here. 1569. So we'll see what comes next. If this were to happen, this thing that we just read, this headline, how that would impact the yen, positively, negatively, honestly, I don't know. You could probably argue both sides. I do know this trade's starting to feel like more like an investment than a trade. Yeah, you're right, William. You could argue both sides of that and still lose. Yeah. All right, I'm going to go ahead and close out the radio show, guys, so I can get one of these headsets off. Now, so those of you who are listening to the video after the fact, you won't hear the music playing when the show goes off, so it'll sound a little weird to you, but hey, that's okay. All right, that's going to do it, guys. Thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell. Okay, the radio show's closed out. I'm relieved of one headset. The video is still running. We got stopped out on our trade here, minus 8 ticks. Now, this is a great opportunity for you to sit back and study. Okay, this time, things were pointing that the market might go the other way, but there will be times when you shoulder the risk and it still goes on to give you, your target, even though the tide is turning against you. Am I trying to sway you one way or the other? No, absolutely not. What I'm encouraging you to do is to look at both sides of the equation, because again, what you don't want to do is start trading your plan. Once you get your plan written and the deal sealed, man, people have signed off on it, everybody's patting you on the back, dude, that's a good plan, go trade it. You don't want to be 4 days, you spent a month writing this plan, and now you're 4 days into the trading it, and all of a sudden you're like, you have second thoughts. I think I want to get out, or I want to stay in. It just dawned on me to the people who are listening to the radio live, I abruptly cut you off. And I went live with the pre-recorded content. This is way too confusing. I'm going to have to rethink this. I'm going to keep doing it. I've just got to rethink how I'm going to do it. As I was saying, on the trade, we hit our hard stop, 8 ticks. I'm not trying to sway you one way or the other. When things are starting to point the other way, should you get out or should you stay in? I want you to make that decision. What I don't want you to do is I don't want you to spend 30 days writing your plan. You've got people signing off on it, going, dude, that's a great plan, go trade it. And then 4 days into the plan, you have a couple trades that don't do what you expected them to do. Now suddenly you're wanting to change the plan. That won't work. You can't change your plan 4 days in. It took you 30 days to write it. You spent at least 30 days in the simulator becoming consistently profitable. So that's why I say it's so important what you put into that plan, because you got to live with that. It's not just words on a page. That's how you're going to live your life. And you've got to stick to it long enough for you to figure out that it really isn't working over the long haul. Because see, it's about percentages, it's about thinking in probabilities. Again, I'm not trying to sway you to the side that says once you shoulder the risk, stick it out. I'm also not saying at the first hint the trade is not going in your direction, run for the hills. I'm not pointing it in that direction either. I'm just telling you that both of those are valid options. They're both valid options, but you can't have it both ways. You've got to pick one or the other. So think about that as you're writing your trading plan. Which way is it going to be for you? Now, you can just pick one and live with it, or you can go out and take historical charts. You can pick them apart, and when you get into a situation just like the one we were just in, look at the percentages. How many times that what you're going to find out is probably about half the time it goes one way and about half the time it goes the other way. Okay, that's probably what you're going to find out. But better for you that you go find that out yourself by looking at historical charts than to just take my word for it. Because then whichever way you decide to go, you're okay with that when trades don't work out or go in your favor. Because that's going to happen. This right here, this is the truth about trading. William, I'm not sure what you mean. Since I don't have your indicators, I must trade off the BBC until the reverse divergence sets up and then begin to look in the other direction after a setup. I'm not sure, William, what indicators are you talking about? I'm sorry, William. I thought you were a partner. You should become a partner then, because partners have access to the slingshot and all the tools. Okay. Who wouldn't? You lost me. Oh. Well, we have other options. That's not a problem. Shoot Michael an email, support@cfrn.net. Okay, we had a nice little run up here in the yen. We're printing some dynamic resistance. Hey, I'm not going to stick around for another trade. I got to go. But we might. This could turn into potentially a long trade for the yen. But I'm going to close out the webinar, guys. I'm closing everything out right here, right now. And I will see you all tomorrow. All right? Have a great evening. Good afternoon. This is Dwayne. Today is Wednesday, 10th day of April 2013. It is 11:38 a.m. Pacific time. We just finished the radio show. We did a great interview today with Neil Irwin. He is a columnist for the Washington Post, and he just wrote a book called The Alchemist. 3 Central Bankers and a World on Fire, I believe is the name of it. Great interview. If you did not listen to the podcast today, go listen to it out on the blog. This video is simply an opportunity for us to trade our setup if we can find a market setting up. Zeus just pointed out natural gas, which seems to be wanting to give us a setup here. But according to GRA, natural gas typically doesn't show a lot of movement this time of day. We do have dynamic resistance right overhead. Just before I turned the video on, we had the dynamic support and resistance. In fact, I'll put it back on for the benefit of those watching the video. Let's go to indicators, CFRN, CFSR. Okay. You see those little red dots there? Okay, that's dynamic resistance, which is different than fixed support and resistance. Here we had broken support, broken dynamic, led to a big move down. Now we're up against dynamic resistance. See how the market's just bumping its head up against this thing? Thank you, Zeus. Yeah, Zeus was pointing out that the price, as you can see, guys, whenever we have dynamic resistance or support, if you look to the right over here, it will be, the number will be highlighted. Just like up here, the dynamic support that was broken, that's why it's highlighted up at 4118. And now here we have it highlighted at 4095. So if we broke above the dynamic resistance, that might not be a bad trade. But again, if we're in a market that does not typically have much movement this time of day, well, we had this much movement here in the last 5 minutes, it looks like, from 1327 to... Alright, well, let's see what we got. Let's draw a trend line. That doesn't look... Let's get rid of the dots again. Okay, no more dots. And for the cycle is blue. It's up at the top on the slingshot. Green line down at the bottom, getting ready to hook up. So that part of the equation is good. I would really like to see a pullback to the BBC to support this trade going along. Now, the fact that we know there is dynamic resistance overhead, as you're writing your trading plan, that might be something that you put into your plan, is that I will not knowingly trade, I will not knowingly buy into dynamic resistance. I will, however, trade broken resistance. So that would turn this into a bit of a two-step trade for you. First, you would want to see this 4095 area broken, okay, or whatever that number was that Zeus gave me, 4095, which also happens to be where the CFMA1 is. I want to see that area broken. If it's broken, then I'll take a momentum trade on to the upside. If we get a pullback here, because we're limited on time, I will put this trade on. Because in the basic rules for the slingshot trade, we don't get into the minutia of the dynamic support and resistance. Okay, I just got notified that the ES is setting up as well, so let's have a peek at that. We'll move this DOM out of the way for the moment. Natural gas, the way the divergence is shaping up, is starting to look pretty good. Okay, on the ES here, we have a bearish cross, but see the pull away happened before the cross. We actually need a pull away after the cross, and the divergence is not right on the ES for me. So I'm gonna pass on the ES. I'm gonna go back to the natural gas over here. See if we can get a trade out of it. If this cycle stays blue up here and then the green starts to hook up, we'll take a shot at a momentum trade coming up out of the hole. And then we'll look left and we'll see that if we were to get into this trade, our first obstacle would be right here. So not a lot of room to run. And a quiet market. Now, as you recall yesterday, if you were here watching that yen trade, we waited forever for the one candle to print. It finally printed, and then we had two candles print rapid fire. Now, that's the thing about range candles. There's no time element involved. It has to do with the movement of price. So you can know definitively where a candle may open or close. What you don't know is how long that's going to take. So you trade, you know, an element of certainty for an element of uncertainty. Okay, that's our first touch of the BBC after a bullish cross. Get an up close here. Cycle hooks up. We'll be good to go. We'll take a long trade. Again, this is the natural gas market. GNGK3. Okay, the low of this candle so far is 4088. So 4 ticks higher, 1, 2, 3, 4 would be 4092. So we would then look to get triggered into the trade at 4093. Okay, 4093 is where we'll look to enter the trade on a stop if the market comes up and sweeps us into the trade. So again, this will be our entry if the market starts to move higher. And close above this trend line, get triggered into the trade. If we get triggered in here at 093, our stop loss will be automatically placed by the DOM as part of our bracket order at 085. Now sometimes in this situation people will ask, well, hey, but what about this over here? What if price comes down? Won't you accidentally get triggered into that? The answer is no. These orders are contingent. This has to be triggered here before this becomes active. So if price were to just start falling and it'll just fly right past this, it won't do anything, it won't trigger you in. Jeanette mentions that there is very low volume on the GNGK3. I'm sorry, Jeanette, your question, but stop, question mark. This will be our stop once we're triggered into the trade. Once we buy our way into the trade, we'll be long, okay? And then to get out of a long position, you have to sell. So we're going to get in on a buy stop. We'll get out on a sell limit. You're welcome. On the interview today with Neil, I forget who it was that told me to ask him about the creature from Jekyll Island. I had planned to ask him that anyway, and I'm glad it was brought up because the person that brought it up had the correct name of that book. I was going to call it The Train to Jekyll Island because the book, it transpires on a train. And it has to do with the creation of the Federal Reserve and a whole lot of stuff. If you've never read the book, it's an interesting historical read, and it questions whether or not the Federal Reserve is a good thing for America. I know that many of us believe that it is not necessarily a good thing, and I think Neil today, although he's looked at this thing up close, he has some misgivings, but I don't know that he's certainly not completely against it. In fact, I think his book leans towards, we're in a big mess, but had it not been for the actions taken by the Federal Reserve, we'd be in a much bigger mess. But I have not read the book, so I know that a couple of the folks in the audience said they were starting to read the book even as we were doing the interview, and I had some comments that it was a very good and very interesting book. So I would, if you choose to read that book and you'd like to come on the show and do a review, or you'd like to write a review, or I can hook you up with some equipment, you can record a review, let me know. I think that would be very good. And you guys might send him a tweet thanking him for coming on the show today. Now you may be wondering, well, how would I do that? All right, I'll tell you. I'll show you. If you wanted to write a tweet to him, well, first, in order to send him a direct message tweet, you have to be following him. Okay? Now, let me go find his Twitter address. Well, in fact, that's a good point. Let me just show you how you find that. Okay, let's type in Neil Irwin, and there it pops right up. See, that's him. Okay, now that's his Twitter handle, @Neil Irwin. As soon as it loads. Here we go. Okay, so anyway, this is him, @Neil Irwin. So if you were going to send him a direct message, here's what you would type. You would type @Neil Irwin, @Neil_Irwin. Then you would say something like this. Thanks for being on @CFRN today. Now remember, with Twitter you only have 140 characters to work with. This is a very brief message, but you would just type this in. @Neil Irwin, that sends it straight to him. You've got to follow him to send him a direct message. And then you say, thanks for being on @CFRN today. Okay? And then the Twitter feed catches this and this, so anyone searching on this or this will find this, the message you wrote. We just got triggered into the trade as we were having our little Twitter lesson there. Okay, so let's watch this thing. We got triggered in at 4093. We have a stop loss automatically placed by our DOM down here at 4085. Okay. We had bullish divergence. The cycle line was blue and at the top, green line at the bottom hooking up. We had a bullish cross here. The CFMA1 crossed above the green line, the BBC. Price then, after the cross, price pulled away and then pulled back. We drew a little trend line. We got to close. You know, you could argue this. See how we closed right on the trend line? But we're limited on time. We're in the trade. Let's leave it at that. We're in the trade, although let's not forget that we looked at this, we loaded up the dots, we got dynamic resistance as indicated by the CFRN SR indicator, the dynamic support and resistance indicator. We know that we have dynamic resistance just overhead. We also have the CFMA1. Those are both obstacles to our trade. So what we need is price to close above the MA1 and above the dynamic support and resistance. And now, since drawing the trend line is no longer an issue, for the sake of example, I'll go ahead and put the CFRN SR indicator back on. See those red dots? Okay. That's a wall we're running up against. See, price is banged into it 1, 2, 3. This is the 4th time. So the real big question here is, can price close above dynamic resistance? If so, then we're trading broken resistance, and that becomes a very good high probability trade if the resistance holds on a pullback. But let's just wait and watch. We've got 1 tick in the trade so far. Again, our entry was at 4093. We're trading natural gas. Our stop loss 8 ticks away, 4085. We never risk more than 8 ticks when we're trading the slingshot. Now my goal as this trade begins to advance will be to get my stop loss to break even plus a tick. That 1 tick covers the cost of commission in the event the market comes back to stop us out. Before we can concern ourselves with doing that, we need the market to first advance, to move higher, to take out this little swing high, to take out this dynamic resistance. Back to our Twitter lesson. Anytime you're sending a direct message to someone, whatever their Twitter handle is, you just put the little @ sign in front of their name and you begin the tweet with that. Then you say whatever else it is you want to say. And if you're referencing a topic or something like E-minis, thanks for being on CFRN today, the E-mini show, you would go the # hashtag E-mini radio show. There we go. See how that works? We use someone's Twitter handle to address the tweet to them. We thank them for being on this show, and we let people know that this tweet has to do with the E-minis. What does the hashtag do for you in Twitter? Well, if someone goes out and searches hashtag E-mini, every tweet that's been sent out in all of time that has referenced hashtag E-mini will be brought up. It's a filtering method. At the end of my tweets, you'll see it says usually E-mini. It'll say hashtag E-mini, hashtag futures, hashtag trading. Depends on whatever the subject of my tweet is. I want people to be able to filter and find it based on that. And so that's what people use it for. And so when you're watching TV and you see, I don't know, you're watching All My Children. I don't know, that's for some reason that TV show popped into my head. I guess because this is the time of day it's probably on somewhere. You'll see on the TV screen hashtag, or, as kids we called it the #sign, but now it's a hashtag. Hashtag All My Children. So if you go to Twitter and you search hashtag All My Children, it'll bring up every tweet that anybody anywhere in the world has made about all my children. That's the deal. All right, we ran into dynamic resistance right there. Look what happened. We were not able to punch through it. Not on that first attempt anyway. Still have the divergence in our favor. The green line should start working its way up to the cycle, to the blue line. So we need a push, we need a punch, we need to get through that dynamic resistance. Now again, if you're just sitting around trading and you have all the time in the world, you're only looking for 1 or 2 good setups a day to get your points, and you're not pushing the envelope, you're not pressed for time. If you're pressed for time, you should probably not trade. Dan, look right up here. Dan says, how much is a tick worth in natural gas? Okay, you see that one tick right there? I'm going to right click this and I'm going to change it from ticks to currency. Now as soon as it moves a tick, it's going to show you the dollar value of one tick. We've had as much as 2 ticks in the trade at one point. We've also been down as much as, we've been up as much as 2 ticks and down as much as 1 tick, it looks like. Again, our entry was based off the break of the trend line here. I think we've been up 2, down 2, that was it. There we go, there's a tick, okay? 1 tick, 10 bucks. Did you see that? Do you see it, Dan? Okay. It'll do it again here in a minute. Okay. All right, who's this from? This is from Scott. Oh, market moving down. Okay, it's gone 3 ticks against us. We need the BBC here to act as support. Otherwise, this little flat top here, where we ran up against dynamic resistance, it's going to push price down and we'll be stopped at 408.5. Now remember, we never move our stop. We assign 8 ticks of risk to the trade when we get started, and that's it. We don't move this. Okay, from Scott, he typed in, pound hasn't really become hashtag. The character itself is still called the pound sign in American English, but in British English it's commonly called the hash sign, so it's easier to see the evolution of the word from there. Hashtag itself refers not to character, but to the character and the word or phrase that follows it. It's a portmanteau of the words hash and tag, which accurately describe its appearance and function. It's a tag that's used for performing searches through social media and other media that implements it, and it's prefixed by a hash sign. Okay, very good. I did not know that. How are we in at the same price, but I am $12 lower than you? Because your price up here is probably factoring in commissions, John. It's my guess. You can set your DOM to reflect commissions, or you can have it set to reflect simply the price movement. Either way. Why did I go against the dynamic SR? Because I only have time to put on 1 trade today, and I wanted to talk to you guys and answer your questions, so that's why I put it on. And that's why I pointed out that before I put it on, that if you were just sitting here waiting for that opportunity of the day to get your couple points, this would not be the premium opportunity. That you would probably want to wait until dynamic resistance was broken. Now if it's broken and then it gets held on a pullback, that becomes an excellent high probability opportunity. One of my favorite trade setups. Anytime I can trade against broken support, broken dynamic support, or broken dynamic resistance, I really enjoy those trades. Okay, we're down to 4088. We're 3 ticks away from being stopped out. We had no opportunity to move our stop loss up to break even plus a tick. Not yet anyway. Trade's not over, but it's certainly not moving in our favor at the moment. Okay, time now 12:04 p.m. Pacific time. We've been running this video 26 minutes. We've been in the trade now for 1, 2, 3. We're on our fourth candle. We're using a 4-tick range chart, which is not to be confused with a 4-tick chart, which is very, very fast. Okay, price moving down. The BBC has to hold right here and act as support, or price will find our stop. 8 ticks of risk on the trade. Going into the trade, we knew we had an obstacle hanging overhead. Any questions? As soon as this trade's over, I do have to go, guys. I gotta take my wife to an appointment. So I won't be able to hang out for a second trade today. I would like to hang out till this one completes. Let's have a peek at the S&P real quick. Okay, up here, our final weekly trading zone, we got within, let's see, the high was 84.25. So we got within 7 ticks, and then we're putting in that retracement. Okay. Again, I said earlier today that moving all the way from this zone to this zone in one move, that's a lot. That's a big move, 16 points. And we ran out of energy. So it's pulling back, gather some energy, get some reinforcements, take another run at it. Where might that other run at it be? Well, we can come to this swing low, pull it up, and we can see that any of these areas in here, 1576, 74, 72, those are all fib levels. If it's going to continue, if it's going to maintain its momentum, then the 23.6 or 24 will hold. Okay. However, with the day only being Wednesday and us getting this close, I would venture to say that, if not later today or tomorrow, by Friday, we probably will see the 86, 87. All right, let's go back to the natural gas. Here we are. Scott, how do I find those weekly? I compute them. It's my own little recipe. And they're made available to the CFRN partners every Monday morning prior to the market opening. And then once they're out there, they're cast in stone. They're good for the entire week. They don't change. You're welcome, Scott. Bob, your question, will break even be 80? Yeah. I mean, 8 ticks at $10 a tick, right? Plus whatever commissions, you have on the trade. So I can, and now for those that missed that, if right here where it says total PL, you right click it. You can put it on currency, ticks, points, or you can just make it go away. If you don't like looking at it because it makes you, nervous, you can just make it go away. It can be ticks, money, or just vanish. How do we configure the DOM to show commissions? See this little gear right here? Display items. Let's see. There should be a setting in here somewhere. Look for that, Jeanette, and if you need to, call Bert and ask him to help you find it, or Leslie, if you want it to show. Currency points, ticks, we already know about that. It should be somewhere under that little gear right there. Alright, price looks like it wants to come up here. It's right now up against the CFMA1. If it can get through that, then it's got the obstacle here of the dynamic resistance. Gotta overcome that. And then an 8-tick target would put us at what, 40 4101. So if we got in at 93 plus 8, yeah, that would put us up here. An 8-tick target would be right here. 80 bucks. And we'll go ahead and stick a target out there. I left clicked to put a target out there. You keep a good thought. It could happen, right? Right? Okay. Our cycle line's not giving us any trouble. It's still blue. We haven't had much movement, much activity, but it's still blue. What we need is the green line to hook up and get moving. That'll tell us we've got some action to the upside. We're down 4 ticks in the trade. That's half of our risk. We risk a total of 8 ticks on the trade. Price struggling to come up through the black line there, the little step line. All this weight sitting on top of the trade. So it's got its work cut out for it. Really the only thing in the favor of this trade right now would be the divergence, and would be the fact that the green line, the BBC, will often act as support, as it did here, as it tried to here. Now that's when price is north of it. When price is south of it, just the opposite. See, when price bounced up over here, resistance. Boom, pushed it right down. Oh, Bob, don't say that. Oh, you know what I did? I left the chat box hanging out here in the window. That exposes people's names. And now I got to go through everybody that's in here and ask them, is it okay? Before I can publish. You know what? I just need to figure out how to do that blur thing in the video. Because you guys can't see the chat box, but when I'm videoing my screen, I forget that the chat box is actually viewable in the video. So there's a little tool in there where you blur something, but it only blurs for like 5 seconds and then it stops. I need to figure out how to tell it to blur for a longer period of time. But that's my problem, not yours. Our problem is this trade. We're stuck. We're down 4 ticks. Got very little movement. Now I can pull up volume. Won't help me a lot because I'm not normally a natural gas trader, and so I don't really have a point of reference. But just so you know how to do it, it's right here, volume. There we go. Had a volume spike back about 30 minutes ago. And what's a volume spike in natural gas? 1,168 contracts. And then it really trailed off. See, this exhaustion came right here. This big spike in volume came right as it ran into this dynamic resistance. Now, if you're looking for someone to do volume analysis, I'm not that guy. Jonathan, who has been on the show a couple times, a friend of mine here in Phoenix, and who I plan to start doing a show with at some point in the future. He's very good at volume analysis. But he's more of a market profile guy than he is this kind. His volume runs over here, not over here. I'll show you what it looks like. Now you can see that right there on this candle right here, if you look right, you can see that spike on that histogram, and then if you look down, you can see that big spike in volume there. See how those two correspond? That makes this some kind of hot spot, sweet spot. I don't know. I don't know really what they call it in that world of volume analysis and market profile, but there it is. My crosshairs, watch my crosshairs, look to the right. See that spike? Look down, see that spike? Right here on this candle. Don't ask me any questions because I don't know the answer. About volume. Now, other than the ordinary stuff. On equities, we used to put a lot of stock in volume because, you know, if prices were higher on light volume, we considered that to be a fake out, and we didn't put a lot of stock in it. And I'm not so convinced that that holds true in futures in the same way that it did in equities. I think that the jury's out for me on that. I'll tell you what we do watch from a volume standpoint. Auto sum bid ask. Apply. Okay. Okay, right now I got 197 contracts on the bid, 205 on the bid. I got 184 on the ask. Okay. Now, conventional wisdom says that if you've got more on the bid side than the ask side, price should move higher because you got all these buyers pushing it up, and you don't have that much for sale over here. Okay, that's conventional wisdom. What Michael and I have noticed over time is that when there is not equal distribution between the bid and the ask, price actually tends to be drawn towards the size that has more weight. So while conventional wisdom says that price should go up based upon this unequal distribution between the bid and the ask, our own personal experience says that unfortunately, I'm in a long trade, I hate to say it, but price is going to come down unless this balance shifts. Yeah, I know I'm right. I'm just telling you guys what the books say. If you go try to learn this from a book, the book's going to tell you if you've got 1 million contracts on the bid and only 500 contracts on the ask, just common sense, price is going to move higher. but it doesn't. At least not always, and not for long. Okay guys, I can give this about 5 more minutes and then I'm gonna have to go. I'll leave the chart running, but I'll have to shut the video off. We're down 1 tick in the trade. We're right back where we started, basically. We got long at 4093. We're sitting at 4092. Cycle indicator still blue. Green line hooking up, still got our divergence. Get rid of this volume because it's not helping us any. I'll put out a tweet tonight on the S&P again if I see something of interest. We're up at these high levels, so unless we get a decent pullback, the chance of you seeing me put on a long tweet in the S&P is pretty slim. I'm not going to go long into unknown territory. But if we get a nice pullback, if we come back to the 69.70, then that's a high probability that we'll take a run. Because it would be a 62% overshoot of just this leg. Now you don't have to measure just this leg. You could go back and measure the entire move. You could do that off of a daily chart from here. Go from this low to this high. Okay, and that puts your 62% retracement at 1554 roughly. So let's go back over here, put it in context. Make sure I got that right. 1554. Yeah, 38, 50, 62. So from yesterday's low to today's high, a 62% retracement would be 1554. Not 64, but 54. That's way down here. Right in between these two tweets right here. 54. That's a 62% retracement. Now, there's nothing that says we're going to have a 62% retracement. But if we did, that's what it would look like. And people would be screaming, oh, it failed, the move failed. And, you know, it can come back. It could come back and test yesterday's. It could go beyond a 62. It could come all the way back and test yesterday's low. You're still not even to the middle of the channel. And it could break out and put in new highs again. You have to embrace all the possibilities. All right, we got one tick in our favor. We're back up against this dynamic resistance again. We talked about this yesterday. The more times you hit an area of support or resistance, does it become stronger or weaker? There are people who will argue you down all day that one or the other is correct. And the final analysis, after you do the math, it's 50-50. You can go either way. The resistance can get stronger, or it can eventually, you know, half the time it'll make it stronger and half the time it'll wear it away. It'll erode it. It's things like that in trading that we always have to be very careful about tying ourselves to. These absolutes, if you will. Because those absolutes come back to bite you. There's very few absolutes in trading. All right, it's really trying. Okay, we got choked on my iced tea. That's not good. All right, we got a couple ticks here, 3 ticks in the trade. We went ahead and stuck a target out here 8 ticks away at 41.01. Really, my goal is to get this to +1 tick so that I have a free trade And if it does come back and stop me out, then the 1 tick covers the cost of commissions. Well, let's just wait and see. It's too premature to do it right now. Because if we were to, now we could right now, that would be very aggressive risk management. We could take our stop to 4094, lock in 1 tick, that covers the commissions, but then we're only 2 ticks from being stopped out. Now, is it possible to just aggressively trade like that? Sure. You'll take quite a few trades over the course of a day, but you're diminishing your exposure to the market tremendously. So it's something to think about as you sit down and spend the next month writing your trading plan and your business plan. Think about how you want to handle those situations. Okay, this thing still has not broke free of dynamic. I mean, we got a little giddy there for a minute. You know, we had 3 ticks, but it still hasn't broken away. It got above it, but for all practical purposes, it's still being held down by this dynamic resistance. And look what's happened to the green line. It's worked its way all the way up almost to the cycle. Okay? And by the time it gets to the cycle, then we expect a what? A pullback. And if we get a pullback here, what does that look like? Something down here that's going to 4085. A 38% retracement right now would be just enough to knock us out to the tick. Our best bet is probably to just take a couple ticks here and be done with it. If it goes back, if it give me 4 ticks, just give me 4, and I'll move my stop to break even plus a tick. Time is running out. What did one trader say to the other trader? I wish I'd have took the 2 ticks. Jonathan's not here today with his joke. Yeah, we've had opportunities to scratch out with a couple ticks, opportunities to scratch out at break even. We're still in the trade. I said I'd give it another 5 minutes about 10 minutes ago. We've been running the video for 49 minutes. This time of day, these trades, I don't know, it's just not the best time of day. It is what it is though. Hey guys, I gotta mute my mic for just a second.